This video is for all of you that want to learn basic tax returns. And when I say basic, it means that there's only a W-2 and a 1099 interest. If you have more than one W-2 or more than one 1099 interest, the concept should be the same. So first, you'll get a W-2 from your employee, and this Excel software or this Excel template is going to be similar to what you would input in a tax software, and then it all funnels to the front page of the Form 1040, which is the personal tax return form, tax form. So in this scenario, we are assuming that there's one W-2 for $100,000. There is $15,000 withheld for federal income taxes. There's $100,000 in Medicare wages, $100,000 in state wages, $6,000 withheld for state taxes. There is a 1099 interest from a bank of $50, and that's it. So once you input that into your tax software, or if you have an Excel sheet like this, it should all flow to the front page of the 1040. And you can confirm it by seeing that there's $100,000 in W-2 wages, $50 in taxable interest. You get your your total income of $100,050, and then you get a standard deduction. So you can toggle. So it'll depend on either if you're single or married. So let's start with single, and this is tax year 2024. Most people will take what's called the standard deduction. You take the higher of the itemized or standard deduction. So the $14,600 is a standard deduction. If you have medical, dental expenses that are over 7.5%, plus property taxes and mortgage interest, and if you add that all up together, including your donations, charitable donations, and it's more than this number, then you will take the higher number. But for most people, I think they take the standard deduction of $14,600 if you're single. This leads to your taxable income of $85,450. And your taxes on that would be $13,852. And this is how the tax is calculated. There's different tax brackets. The top tax bracket for this make-believe person is 22%, and there's different layers of taxes. So the first $11,000 is taxed at 10%, the next $35,000 at 12%, the next $38,000 at 22%. So even though the marginal tax bracket is at 22%, the effective or the average tax rate is 16.21%. I know sometimes people get confused with this, thinking they're in the 22% tax bracket and their entire amount is taxed at 22%. It's just any amount over the threshold, and this is the threshold brackets of what amounts would be in each percentage. I live in the state of Nevada, so there's no state income tax. So for me, most of this would just be done here. Oh, I forgot to keep going down. So $15,000 was assumed to be withheld from the paycheck, and if that's the case, you'll get a $1,148 refund. And I want to bring this point up because a lot of people are focused on what you get back as a refund or how much you owe at tax time, but the tax itself doesn't change. It's all going to be dependent on how you fill out your W-4 of if you let's just say you only withheld $10,000. The tax is still the same at $13,852, but now you owe $3,852 at the end of the year or at tax time. And if you withheld, let's say a lot, and let's say it's $20,000, you would get a refund of $6,148. The tax didn't change. So when people say they got a really large refund or they owe a lot of money in tax time, it's usually just a function of how you fill out your W-4 forms and how much was actually withheld. Like I said before, I don't live in a state that has income tax, but I do work on clients that live in Arizona and California. And so this is what their state income tax looks like. So in addition to paying federal taxes, they would have to pay state income taxes. Arizona is pretty straightforward. All the numbers are essentially the same. The tax is just what's different. Right now for 2024, it's 2.5%. So their taxes would be $2,136, assuming $6,000 was withheld from their paycheck. They would get a refund of $3,864. Same concept. If we adjust what was withheld from their paycheck, the refund or what's owed would increase or decrease. For California, it's similar, except for their standard deduction is $5,540. So the starting taxable income is a little bit higher. This is from their tax tables, $5,331. There's a personal exemption credit of $149, so their tax is $5,182, and we assume that there was $6,000 withheld from their paycheck, therefore they get a refund of $818 in this scenario. Now, if you are married, it's going to be a little bit different, and we're just going to use the same numbers. And this number, this $100,000, could be 2 W-2s that total up to $100,000, or one person's W-2 at $100,000 and the other spouse maybe stays at home. What's different is going to be the standard deduction. You get double the standard deduction at $29,200, and your taxable income is going to be lower at $70,850. The tax on that is $8,038. And you'll notice that the marginal tax bracket is the top marginal tax bracket is only 12%, because these amounts essentially double compared to the single, and so they're only exposed to the 10% and 12% tax brackets. The effective tax rate, or their average tax rate, is 11.35%. Arizona should be pretty similar. The taxable income gets reduced, and 2.5% of that is $1,771. Same assumptions with $6,000 withheld, they would get a refund. California, their standard deduction is double. The tax from the tax table is a little less than half. $2,495. They do get double the personal exemption at $298, and their tax is $2,197. Assumed tax withheld at the state level $6,000, and they would get back $3,803. Ideally, this hopefully shows you how to prepare basic tax returns. But if there is something that didn't make sense, please let me know, and I can make another video, because my goal of this is just for people that graduated accounting to be able to do a basic tax return, such as their own, or maybe for family, as well as somebody that just wants to learn how to prepare taxes for a living.